I'm sure you'll be smiling ear to ear, having heard that a huge stamp of confidence coming in from one of the leading investors. But I just wanted to take off from, some of the points that he brought up. One of the most profitable financial companies, fastest growing. And I'm sure a lot of your shareholders will be keen to know what the road path is going ahead, or the roadmap is for the company going ahead in terms of your targets on profitability, as well as how you plan to grow vis-a-vis the rest of the players.
Basically, the philosophy of Aptus has been right through the last 11 years, been around two key points. One is really financial inclusion, and second is really value creation. When I say financial inclusion, we have chosen to be in a particular market segment, which is largely underserved, unserved for many decades, many years. And these customers' requirements of home loans are small, largely self-employed, who doesn't have any readily verifiable documents. They live in tier 2, tier 3, tier 4 cities, and they take the money for self-construction of the houses. Land is invariably owned by them. We don't fund for the land. So in other words, this class of customers, this category of customers has been, for a variety of reasons, barring one or two in the history, for a variety of reasons, these customers were not served. And serving the customers going forward in lower and middle income customers, we thought will be a good idea of our contribution in terms of financial inclusion. And also the pie is large and the penetration is low. That will give us a sustainable growth over a long term. On the second aspect, in terms of value creation, we are very keen that we create attractive valuation to all the stakeholders, not just the shareholders alone, whereby the company will be able to attract financial and HR resources to fund its growth over long periods to come. That's why we never compromise on our basic financial metrics, which we are very proud to record is one of the best in the industry.
Yeah.
And our HR resource also, we have possibly the lowest attrition. So in other words, these two principles,
right.
policies, contributed for the growth.
Yeah. Right. Mr. Anand, if you could just give us a little bit more specifics, because in the fourth quarter, you had guided that margins are unlikely to get impacted for the entire fiscal. Looking at the current market construct, can you really pencil and tell us what margin figure or range you're likely to clock?
No, currently, our margins, as has been mentioned already, it's a little over ROA, it's over 8%, and our NIM, ROE is good. This is, despite the fact we had not gone for any revision in our EMIs, consequent to increase in the interest rates. In fact, going forward, we are confident of, protecting these margins, maintaining these margins without really going for any increase in our EMI, at least for the current year. Basically because, we are very strong in our liability side. Our gearing is very low. And of the borrowed funds also, over closer to about 2/3, 65%, is really fixed interest for next 5 years. So we are not to that extent affected so much on the revision in the interest rates. And the balance 1/3 is within credit rating in December 2011. That has given opportunity to, December 2021. That gave us opportunity to engage with the bankers for further finding to the rates to take care of even the small the increase that we are getting on the variable part of the loan. Resulting in that overall terms, we don't expect our interest cost despite, this is totally opposite of what's going on globally and in India as far as the interest rates are concerned. Despite that, Aptus is slightly better placed because of its prudent policy on the liability side for many years and including current year.
Right. Right. Mr. Anandan, great to have you on the show today, and thank you so much for taking the time out and speaking with us.
Thank you.
Okay. Let's move